Gold and silver are in a really nice position currently. Is it the start of something big? Let's have a closer look, because the market showed some really good price action, what we can use for our estimation for the near future. But we also want to have a closer look at palladium and platinum. So stick with us and let's check what the market is saying us. And indeed, we have seen some really nice price action so far, so it is something maybe big ahead of us. But how can we deal the charts? Is this really a good indication what we can expect? Isn't it the news? Isn't it the idea of inflation, for example, that drives the prices to higher levels? What can we expect out of the chart? Is it really realistic? I think it's really important to see what the chart is telling us, not to conflict the idea of inflation is driving prices also for precious metals, but that this is indicating what the market participants are doing. And that's something I really appreciate, when I can see what the market participants are thinking, and not only thinking what their opinion is, what they are currently doing. Are they in a strong mood? Are they buying at any cost? Are they willing to pay any price? Or are they weak buyers? Are they waiting? I'm not really sure. Shall I really? And the market is coming down really strong. You can see from the price action what the behavior, what the mood is of the market participants. So I think this is something we should have a closer look at. So let's do this. Let's have a closer look at the chart and start with gold. Gold indeed gave us some good indications that the market is maybe in the mood for rising prices right now and easily reaching 2000 or higher grounds soon. Why is it like this? We have the weekly chart, as you can see here in the upper left corner, and you can see that we were pushing through these levels here, which is for some people a good indication, something like a trigger level to enter the market, because we have overcome the last resistance level here in this area, and this is giving some people the braveness to buy the market from now. This is giving some confirmation. And another one is the falling trend channel line. None of these lines alone are perfect. None of these lines are the real proof that the market will continue to higher grounds. But I think from experience that many people are thinking, okay, now we are in a different shape of the market now. We are not following the same trading pattern anymore. So they are encouraged that the bear market is now over and the bulls are back in charge. So you can see this is giving some good mood for the longer term buyers, for example. So maybe you remember from old videos that I drew two possible movements here. The first one is a direct move to the upside, and I blurred it out a little bit in light blue. Here you can see, because this was not my favorite style of movement here, because I thought it might be a little bit, the probability is a little bit higher that this drop will come. We did not see any confirmation that this will start, but I was not sure that this movement has the better chances. Of course, there was the chance for this one, but as long as the market was staying below this level, this movement is the second best option, and this one was the first. Now this completely changed because of this breaking. I think this level, or this movement, roughly, not necessarily exactly a straight line, but this movement, this direction from here, has higher chances than going down first and then turning around. So I think this is still possible, of course. It's not over. You cannot say, no, there's no chance that this will happen. But I think this deterioration here is not what the market is expecting now from the very point here. And this has some reasons, not only from the weekly chart, it is only from what you can see in a 4-hourly chart or an intraday chart, because you can see that the braveness of the buyers is back. What I was wondering is, this was a good movement, awesome. Some shaky down move, it's okay, let's keep it like this. And from here to here, I'm sorry, I'm just a German guy. From here to here, this is a movement to the upside, but with a lot of overlapping. So you can see this is something, normally this looks like a corrective pattern. And I would expect that the market will continue to the lower side, which is leading us to this box maybe. But after this one, I doubted a little bit because this was not strong. It was also weak, and it was weaker than this one because we have a little bit more overlapping. It was from typical behavior, from the steepness, from the slope. It was not so strong to the downside. And breaking through this level, this was at least some sort of a bullish indication here to buy this market. To be honest, I did not buy at this level. How stupid you can think. Yes, it might be, but I'm not super satisfied with this part here. And if this is happening, I'm not a buyer. I'm just staying at the sideline and waiting for the next opportunity, which definitely will come. Please don't get a feeling, I missed this wonderful opportunity. Maybe in this, it's a perfect time to talk about the difference between investors and traders. An investor is just believing, hey, gold, for example, or a certain stock is wonderful. I want to have it. And that's absolutely okay. I'm not against this, but it's a completely different behavior and a completely different style of, working with the markets. An investor is believing, hey, this is a good thing. I want to have it. I want to buy it and I want to keep it. So I have, let's say, $1,800 in my pocket. So I will buy one gold bar, for example, and I want to keep it. That's absolutely okay. As a trader, I'm thinking completely different. I'm not very much eager to get a low price. I want to have a really nice price situation because my risk is not buying for 1,800 one gold bar and keeping it forever because I know somewhere in the future the price will rise. As a trader, I will enter the market and set a stop, and this is my risk. So I have multiple gold bars, for example, or sometimes it's just paper gold. It's a different issue. It's not to keep the gold for safeness. It's something for a trading opportunity. So to have some price differences. So even having some price levels which were higher are not as bad as long as you have a tight stop and if you have a good trading idea behind that. So it's completely different. Some viewers, I realized, were not realizing that I'm talking as a trader and I'm not interested in gold, to be honest. Of course, it's nice to have physical gold and I like this and it's a good opportunity to enter the market at a low price level. But if you want to have gold for securities, for example, then it does not matter very much whether you enter here, or even whether you enter here. It is most important to have some physical gold in your hand so that in any case, if something worse happened or really bad happens, then you have gold in your hands and you can deal with it if you have to, if you want to. From a trading perspective, it is, for me, no difference buying here, or buying here. It depends where's my stop and where's my expected target. And some people are just focused on the target, but as an institutional trader, I'm not interested in the target. I'm interested in the risk management, which allows me to open a higher position size or a lower position size, depending on where the stop is, where I can take or where I have to leave the position because it's not going into my favorite direction. So in this case, this was really corrective looking. And is this even possible that this is the start? Because we learned this is nothing possible at a starting point. It is. And we call this a leading diagonal. A leading diagonal is looking a little bit like this. It can be a leading diagonal, and it seems to be a leading diagonal now. Why didn't I tell you that before? Maybe I did, because very often I talk about this, but why do I, for my trading, why don't I respect this and say, hey, this is a good trading opportunity? Because if it's an impulsive move, these leading diagonals, LD for leading diagonals, in commodities, and gold is a commodity in a rising market, the probability of these are roughly 10% or even maybe a little bit below or higher, even if it's a little bit higher. So it can occur, and it seems now from the retro perspective, it seems that this is something like a leading diagonal here, which is the first start of this movement. This is the second wave, so I can place some numbers, and we are now in a third wave. And this is really awesome because this is indicating there's more to come. Because this is not the absolutely first wave. It is, we had a big first one here, a big second one here. And now within the third wave we have here, it seems to be the first, the second, the third. After this, somewhere, I don't know when it is, but somewhere we will get something like a fourth wave down, which will be followed by, yeah, you expect it, a fifth wave. And this fifth wave will end this third wave coming from the bigger picture. And after the third wave, we can expect something like a fourth wave on a bigger picture. So let's draw it like this. What I've drawn here, this is just an idea. It's just an estimation what we can expect. It is roughly looking like this. The down movement, and now the 1, 2, 3, 4, 5, coming down again and coming up again. And finally, this is fitting into this picture. We have a strong move to the upside and ABC to the downside. So just think about, this is a big 1. This is a big 2. And this is the smaller 1. And a smaller 2. And this is the first one here. And the second, and so on. So you can see we have a lot of more to come. And we can expect that the market is now here coming into a 5-wave move up to the upside, which is leading us at least to this level. And to be honest, it seems that there's more power so that the market easily can overshoot by far these levels. So it is easily possible that we see 2,500, 3,000, or maybe even higher prices. I'm not sure. I don't have to decide this now. Am I really sure that this will happen? No, I'm not. I'm absolutely not sure, but this is a really typical one. And now, by crossing over these lines I've mentioned before, here you can see it in this picture, this door is wide open and we have a good chance for this one. So indeed, the picture changed, so I'm currently not focused on this movement here anymore. It is still possible. We cannot say this is absolutely over, it cannot happen anymore, but the probability for this one is way lower than a few weeks before. It would have been way stronger when the market from this position here is continuing to the downside. Not even as far. It could be just a drop to these levels here, breaking through this level, and I would quite sure expect that the market will reach 1600. But currently we had a strong move to the upside, which is also indicating, the first one was a leading, the second is a corrective pattern, the next one is a strong move to the upside, which is opening all doors for a bull market now. So what shall I do as a trader? As an investor, it's a no-brainer. You can just buy, and even when the market is coming down to 1500, you would say, yeah, but in the future, we can expect only by inflation that the price is going up. Yeah, absolutely. I'm absolutely sure their chances are high. And if we have some problems in the world, we have some geopolitical situations currently in the Indian Pacific region. So there might be a chance of something bad happening for world economy or for political situation. So there are good reasons to have some gold in your hands. No worries at all. But it's no matter where you buy it. It's just to have it and keep it and say, hey, in the future, the price will get higher. And it's good to have something just to have some extra payment in case we have some problems with the money situation. Or the monetary situation with our currency wherever you live. But as a trader, it's quite important to see things like this, because this is giving you the leverage to enter a position with a higher position size. So of course you can just take this knowledge to maybe give your buying for physical gold a better timing. So you can really use this one to give your buying for physical gold a better timing maybe. So it seems to be a good time to buy even physical gold. But also for me as a trader, this is a good idea, or giving me a good idea. From now on, I can strongly look for buying opportunities, because the big picture changed now for a really bullish idea with higher price levels to expect. So what shall I do as a trader from the trading perspective? What I think is working quite good is wait for something like a setback. If you see that the market is moving strongly, you will definitely experience some setbacks. Sometimes on a smaller time frame, sometimes on a bigger time frame, and sometimes on a real big time frame. You can see this as well. This is also nothing else than something like a corrective pattern, what we've seen here so far. It depends on the time frame you're trading, but in this case we are focused on this intraday chart, the 4-hourly chart, or you can roughly see this in the daily chart as well, but I would focus on something like a 4-hourly chart here because it's easier to recognize what this is. If you have some corrective pattern here, and corrective pattern are looking like this, for example, which is going back, forth, back, forth, back, forth, back, for example. Sometimes it's just looking like an A, B, C pattern. You can see this sometimes quite clearly. We have seen this here in a lower time frame, for example, or you can see this here in a bigger time frame. Sometimes it looks like an ABC pattern. If you have something like this, then you can re-enter the market on the bull side, because I expect that the market is continuing to higher levels anyway. Of course, you can have some timing. If this is the third wave and this is the fourth wave, I prefer to enter this on a lower time frame here. If you're eager to want to have a lot of trading opportunities and not willing to check the market by yourself, you can just check BORN-4-Trading. This is a service where we announce also inside the weeks some short videos or some short screenshots of trading opportunities. So if you want to join this, just drop a line here below in a comment. I have this in German language, of course, already, but I can also or have some clients in English as well. So if you prefer the English language, you can have this. Just drop a line below there, the contact details, or you send me a message, and then yeah, we can deal with it. So in this case, waiting for this setback, unfortunately, we don't know when exactly this is. So please don't think that this is coming next. I don't know when this is coming. Currently, it can be from here, it can be from here, it can be from here, it can be from here. But whenever it comes after this, I have a good start for the next run, giving me an opportunity to enter the market. And some people are saying, yeah, but this entry price is higher. Keep in mind, as a trader, the entry price is not important. It is absolutely not important. It is only important what the leverage is. And for that, you need a stop level. And if you have this entry price, this stop level, this is your risk. If you enter now, where is your stop level? Here. So this is your stop size. And this means I have double or triple position size like I can have here, for example. So even if this is a higher entry level, I would earn more money with this higher entry level because the leverage, because of the lower price or the higher price level here for the stop is in a better position like this far one, for example. This is just an example, but please don't have the impression that higher prices for entering the market are necessarily the wrong one. It can be way more successful because of higher probability, for example, smaller stop size or bigger position size, for example. It can be way better sometimes, not necessarily all the time, to buy high if you have the best situation like this, better than buying here at that level. Of course, you can also do this on a lower time frame. If you don't want to wait for this big setback, if you have something like this and you can see something like this, I guess you know what I would do and what I will do. If this one is this part, if this one is broken, I bet for the continuation here to the upside. And this is also giving me maybe a good entry point, and my stop level can be here, or can be the 78% level. Or maybe can be even this 78% level here, which is to be, I have to talk about this in another video, not now. But this is giving me quite solid stop levels here and a good opportunity to enter the market with a high price leverage. So that's from gold. What about silver? Is the situation the same? And some people are asking me or telling me, yeah, we expect that the price will double in the near future. Yes, me too. And this is also from chart technical perspective, because if you have a first wave in this size and you have a corrective pattern, what we clearly have here, you normally expect when the corrective pattern is over, which we have to check first. But if the corrective pattern is over, we expect the same movement here like the first wave for the third wave, which would lead us to roughly 40, which is nearly double from the low levels here. So you can see doubling the price in silver is nothing really special. It is a really good chance. And the raw situation is roughly the same with gold, but it's a little bit different from that perspective because this here is the lowest point here. So this would be a perfect start for this solid arrow here to higher ground. So I think we have a good opportunity to buy the market now at any setback. Whenever you see a setback here, for example, like this, we have a first wave corrective pattern here, we have a strong corrective pattern here. So in this case, it looks a little bit more like a first, a second, a third, a fourth, and a fifth wave. And the fifth is not necessarily over, it can go a little bit higher, but after that we can expect some setback here. The typical setback we can expect, let's go a little bit theoretical, if you have an impulsive move, 1, 2, 3, 4, 5, the next one should be some corrective pattern, the second wave, and let's check what the second wave can be. The second wave, this is the second wave, or let's switch to commodities to be in the right line. You can see it can be a zigzag. Okay, this is an ABC pattern, a double zigzag, which is also an ABC pattern. A triple zigzag it's a little bit more complex, but it's so rare we don't need to keep an eye on this. A flat correction, which is roughly a sideways correction, the same like a D3, which is also a sideways correction. So we can expect some patterns like this. How do they look in real life? Normally, they look like an ABC pattern. A strong one is something like this. This is a sharp correction. Or a sideways one, which looks a little bit more like this. Which looks a little bit more like maybe this one here in this case. But in a bigger time scale. So we can expect something like this. And after this, it can sometimes also look like this. It's also okay, no worries at all. But it needs to look like a corrective pattern. And size-wise, it should fall back roughly into the area 38.2, 50 or 61.8, which is roughly this area here. But don't get me wrong, this is not necessarily the highest price. It can continue first, so you have to redraw this from this point here to the new highest price. So please don't remember these levels here. I cut them out because they may change when the market is proceeding a little bit higher. But if you see some setbacks like this, this is giving you a really nice trading opportunity to enter the market. So it's not, oh, I missed this one. This is really bad because I should have bought here at this point. Yes, of course. No, not bought here. You should have bought here at that point. Yes, of course. At the cheapest price, $1 or whatever it was in the past. But that's not given anymore. Maybe you have some positions already. But if you want to enter as a trader, it might be a good opportunity to wait for the setback. You have a closer stop. You have a better position size. You can earn more money out of this when the market is continuing to the upside. And I think we have a really nice situation to expect the market to gain. Of course, it's not 100% sure, but the chances are way higher currently. And the good thing is, the risk-reward ratio, if you want to expect something like this, is really, really high. So you did not miss anything so far. This is giving you a confirmation that we are proceeding through all these levels here and that we can expect some more to follow. Many people are trying to enter the market at that price. I don't like this. I think it's useful to wait for a setback because this is giving me a better risk-reward ratio, a higher trading size, so we can use this with a higher leverage. But depends on your own trading idea, what you want to do, whether you want to just to buy one contract or some bar or whatever and keep it. But I would wait for a setback here, and whenever the setback occurs, trade the trigger level here to continue into the bull market direction in this case. You can also do this on a lower time frame, but expect, even if you want to trade this on a 50-minute chart or a lower time frame, you should expect that this will come. So keep your stops tight. Don't overdo the position size, and otherwise you have to suffer if you want to stay in the market with this one. Get out of the market if the market is doing this one, and re-enter when the market is coming back. So I think the picture turned around in gold and silver. Currently the chances are quite good that we can expect way more to come. The situation completely changed and gives us a good opportunity to get some higher position sizes by good stop levels we can expect from now. So what shall we do from a perspective if you want to have platinum, for example? Is this also a good trading opportunity? Well, the situation is a little bit different here. You can see that this price movement we've seen from that low here in March 2020, you can see from this movement here, if I roughly follow this one, it looks more or less three-wave pattern-like, which I don't like very much, to be honest. But I don't have to stress this very much. I can just focus on this part here, for example, on a lower time frame, and it seems to be something like a 1, 2, 3, 4, 5. And whenever the fifth wave is over, we can expect some setback here as well. And it is roughly the same situation like in gold and silver, to expect something following like this one. So in this case, I also wait for the setback, giving me a better price level to enter the market. And then I can at least expect something like this. Is this perfect? It's not 100% perfect because we have a little bit of overlapping here. It is not really strong overlapping, but it is just giving us it is not in a shorter time frames, 4 hourly or intraday chart. It's a little bit giving us some doubts whether this is a strong movement already or not. But if this part is really weak, this is more going to the side. So you can see this is the angle of attack. You can say it like this, for example, here for the first part. And when you can see that the corrective pattern is moving overhead this angle here, the slope is not as strong as the upper move, and in a really corrective pattern, then I would dare this one because it's not the worst situation here. I would dare to enter the market when this occurs. Also here, I'm not 100% sure this will occur from the very next moment. It can take a few days or maybe let's say a few days before this happens, but it will happen, I'm quite sure. And when this happens, this is obviously a nice buying opportunity only when the market is coming down in a strong move. This is of course also the same with silver and gold. If you have a strong move and a weak move to the upside, you can definitely say, okay, this is not happening now. We should expect something like this first, and after this we can roll the dice as new and see what the market is coming, whether the market is coming up and giving us a good trading opportunity to do it the next time. So this is really crucial. Check whether the market is strongly to the upside or and weak to the downside. As long as if you have some patterns like this, if you have a strong to the downside and weak to the upside, this is giving you an indication: strong, weak, strong, weak. You can see, okay, we are continuing a little bit more. So if this pattern is not in a corrective pattern here, like I've mentioned before here, if it's strong, so you should stay with the continuation to the downside here. So last but not least, Palladium, whatever you want to pronounce it, is also gaining. And the first part was really promising. You can see this was the first wave in a 5-wave pattern. We have seen some corrective pattern to the downside, and now it can be, there's a good chance that the market is in the next wave here to the upside. Minimum size would be this one, with the chances for higher prices as well. Of course, I think there's a chance when gold, silver, platinum is rising, that this market will gain as well. The nice thing is, or the interesting thing, not maybe the nice thing, is this looks corrective. And this may also be the leading situation. Leading is always something with overlapping at the very beginning. Let's check, is this the very beginning? Yes, this is the first wave, this is the second wave. We are now in the third wave, wherever it ends, a little bit higher maybe. And if this is the first wave of the third wave, this can be a leading. So if you have some really corrective pattern to the downside, you can also try to enter the market. Another thing is, you can see from the drawings here, I've mentioned this in some of my videos before, that when the market is, if you want to buy this at that point, as long as the market is not pushing through this level, you can just try it, and you can see this is a risk-reward ratio to the minimum target. And from this pattern, when the market is really now pushing and this is a leading, I'm quite sure that we see higher prices as well. So it's not the best pattern, but we can expect some quite nice risk-reward ratio, even better than this one, maybe higher than this, or even more. This is a risk. This is a reward you can expect. So you don't need a 50-50 chance, even a 40-60 chance, or only 30% to 70% risk is not giving us a real bad moment, because we have more to gain here in this case. But it is, of course, it's what kind of a trader you are. It's a question what kind of a trader you are. If you don't like to lose money, this is not obvious enough for me to trade. If you say, hey, losing is no problem as long as the losses are small, way smaller than the profits, then I can handle it. Then you can make this deal, because this is not a probability game. In this case, it's a risk-reward ratio game. So that's what you want to deal with in this case. So as we have seen, the market is giving us some good opportunities, at least some good indications that this is now turning into a bull market, into something like a proof bull market, whatever proof means. Some people were expecting this anyway, and of course you have been right. That's no problem at all. So I'm happy if you're along already. If you're a trader and you want to play with your position size, then you have maybe some really good opportunities from now on, because this is giving you some decent stop levels, it is giving you some good entry levels, and you have a good opportunity to have higher position size and run with the market when the market runs the direction we were talking about. So I'm crossing my fingers for you, hoping the best for the next trading week. Looking forward to seeing you again. Bye bye.